Welcome to everybody. I'm Rob Booker, and it's Wednesday, the 4th of August, 2010, and we're here to talk about the euro in particular, but I'm happy to look at other charts in the short term. And so we're going to spend 20 to 30 minutes talking about the euro, and then we're going to spend some time discussing whatever you want to talk about as well. There's a lot of developments that are going to happen within the next, I'd say 6 months. And so there's a lot to talk about and a lot to be excited for, and it's a good time to be a currency trader. I'm going to stop sharing the screen, and I'm going to move over to my browser window. And then in a moment, I'm going to start sharing the screen again. And I want to let you know that the International Traders Conference, sponsored by FX Street, is most likely the only live presentation that I will do in the year 2010. It is the best interactive personal conference related to Forex in the world. It's the best conference related to trading in the world. I'm not exaggerating. It's the only place you're going to meet people, spend personal, individual time with people who really trade. And I've been to every single one of these so far, and it is the best. It is the single best experience that I have as a trader and connecting with people on a yearly basis. It does cost money, but every penny is worth it. I've said it before in every presentation that I've ever done where I've mentioned the ITC. There are traders that I work with who have stayed in touch with each other even since the very first ITC 4 years ago. They're still in touch. They still trade together. I don't know if you can say that about anywhere that you go. The personal contact that you receive, the personal experience that you get, and the individual attention that you get when it comes to meeting somebody who you want to talk to, is in particular just amazing. Todd Gordon is spectacular. Boris Schlossberg is a long-time friend of mine. There probably is maybe only one other person who's as good as Boris on fundamentals in the Forex market. Tiffany used to work with me, and I know her personally. I know her trading personally. And I'm excited to meet Cornelius Luca for the first time, Chris Capri for the first time, and Mike Baghdadi for the first time. So I encourage you, sign up. There is not a lot of time left to get a really good price. If you follow me on Twitter, I will be posting today a discount code for the ITC, which is only available to people that follow me there today. Just look at Piptopia on Twitter, and you'll see my entries, and you'll see the code today. All right. We will bring it back up in a moment. But for now, I simply want to introduce you to the Euro-Dollar weekly chart. The Euro-Dollar on the weekly chart has one thing in particular right now that I'm paying attention to. And if you're able to see my Euro-Dollar weekly chart, just let me know. All right, you're able to see it. All right. Ask questions as they come along. I'll come back to your questions in a moment. Here's what's happening. The currency pair bounced off the 800 simple moving average and was ridiculously oversold. It was oversold for weeks. Weeks on end, this currency pair was oversold, and it's just coming out of oversold on a stochastic oscillator that's measured 30-10-10. These green candles here turn green when the currency pair goes oversold and stay like that until it comes out of oversold. It is now trying to reach up for 34.90. That's the 62 exponential moving average on the weekly chart. It does not have to get there. It doesn't have to get there. If it continues to break highs, that's where it's going. That's most likely where it wants to go if it continues to break those highs. Those highs are 32.61. It's 80 pips lower than that right now, so there's no emergency movement necessary on the currency pair right now. But that 36.50, 36.60 area is an important area and zone of support and resistance. And you're going to want to pay attention to the 34.89, 34.90 mark. If it breaks above 32.70, let's say. It's an amazing rebound for a currency pair that everyone left for dead. And it's good for me because I'm holding on to like 1,000 euros from the ITC from years ago. So I'm in cash on the euro, and I would very much like it to see it go up. That's the weekly view. There isn't anything long term if it goes down. There's nothing protecting this. If it goes back down, there's nothing protecting this pair in the long big picture. If it falls again, it's probably going to fall all the way to retest the lows that it made this year already, and the 800 simple moving average on the weekly chart. All right, that's the weekly chart. Let's look at the daily chart and get a bigger, not as big of a picture view of the pair. On the daily chart, the story is much different. On the daily chart, we're now overbought, and the currency pair is reaching up to hit or nearly touch the 200 simple moving average. That's the blue level on the chart in front of us. We don't even really need this level of resistance up here because we're right here right now, and we are overbought, and the currency pair probably will reach up to hit the 200 simple moving average. It's probably going to do that. Is it a trade that I would recommend that you take, up to 3,300? Well, it's tough at this point to start trading it because it probably will, and it's likely to come back down before it does any of the things that we've talked about in the last update on the weekly chart. Before it does any of those things, it's likely to move around a bit. Now, it can jump up today and then come back down and so forth, but it's really not the time for me to be planning buy trades on the longer term for a bigger move. It's just not the right time for me. If you look at this currency pair in terms of the daily and weekly charts, what strikes me is there's a conflict. On the weekly chart, it looks like it needs to go up more to hit that 62 exponential moving average on the weekly chart. On the daily chart, though, it looks like it's time for a rest. It looks like it needs to pull back a bit. And that conflict is hard to resolve by looking at the long-term charts by themselves. Not about fundamentals for me, although we're going to talk about fundamentals as well. It's not just about that. It's about the fact that the currency pair has trouble stretching past levels that are statistically unlikely to be hit. That's the issue for me. So I'm going to go down one. I'm going to go down to the 4-hour chart with you. And I'm going to say, just like I said before, the currency pair looks like it needs to continue moving upward in terms of technical targets. That seems rational. The trend is positively upward on the 4-hour chart right now. I mean, the recent trend. But I want to talk to you a little bit about the Arizona rules, and I want to talk to you a little bit about these moving averages and share with you some reasons why. The trend isn't all the way up for me just quite yet, and a reversal back down right now is in the cards. All right. This is the blue 200 simple moving average. This is the red 62 exponential moving average. And this is the black and white 800 simple moving averages. These three simple moving averages are the Arizona rules for me. These are a set of moving averages that comprise a way of looking at the market that I have depended on for 3-4 years now, at least. When the currency pair reaches the 800 simple moving average, I call that the Tucson phase of the market. It's a phase of the market when the currency pair has reached equilibrium or reached the 800 simple moving average, which is home base, on any time frame chart, and is likely to range back and forth at that time. It's likely to spin around the 800 simple moving average and decide what to do afterwards. When the currency pair reaches the 800 simple moving average and begins, and the 62 exponential moving average lifts up above it like this, so that the 62 is above the 800 and the 200 simple moving average is below, I call that the Flagstaff phase. That's a phase that's close to Tucson, not, geographically if you live in Arizona, and not in terms of temperature if you live in Arizona. But these two phases are very closely related. These two phases reflect ranging market behavior when the currency pair is likely to move back and forth around the 800 simple moving average and is less likely to continue the strong move that got it to the 800 simple moving average. What that means for me right now is, despite the fact that I have targets above on the euro dollar, I'm looking at targets below on the euro dollar right now. That's what I'm looking for. I'm definitely looking for the currency pair to relax, come back down off these highs, and retest the 800 simple moving average on the 4-hour chart. You have multiple areas where the currency pair went overbought. You have, well, I got all kinds of levels on here. You have multiple levels recently where the currency pair went overbought and then never went oversold. The last time on the 4-hour chart that the currency pair was oversold was back in mid-June. That's a long time ago. That's quite some time ago. So I'm looking for a repeat of that type of move to retest the 800 simple moving average. Like I've said, I think there's room for it to go up, and I think it probably will use that room. But right now, I'm looking for the currency pair in the shorter term to retest the, let's say, 3,000 level, 3,020, 1.320. Let's just put that number right on there. Now, who's going to do this with me? You know, basically, nobody thinks that that's a good idea. I mean, if some of you do here, I want to hear it, and I'd be thrilled to have you join me. But I've been eyeing and had my sights on a short euro dollar trade for quite some time now. Let's pause and see what kind of questions come in. All right, the camera is turned off. And see if there's any questions. There are some people who are already short the currency pair. All right. Bob asks, how do I define overbought and oversold? I use the stochastic oscillator measured in 30-10-10. Jet says, I was shorting it until recently and tweeted you about it. You didn't respond. Jet, I'm sorry I didn't respond. I don't do a whole lot of responding on Twitter, just because I think that it's hard for other people to follow a conversation between two people on Twitter. So, I'm happy to respond by a direct message on Twitter. Hope that's all right. Christopher D says, are you concerned about banks news or more Greek news coming out in the next few weeks? No, I'm concerned about, with the lack of news, I'm concerned that, the market takes a breather from what it's recently been doing, which is what it's doing right now. I think without anybody out there, or without as many players as we've had before, things can be relaxed and currency pairs can reverse. They can also trend. What happens these days is when the market volume is thinner, it doesn't take as much to move the market. So you can have large moves in the month of August when people are on vacation because there's no one to counteract a move. Roadster says, what are my thoughts about the Euro Swiss based on what it has done since your last webinar? I'm absolutely positive that the Euro Swiss is going to gain a remarkable amount this year. That's my idea. Christopher says there's more talk about Greeks defaulting. Wouldn't surprise me, and that would certainly play a part. It could go down very fast and for a long way if that happens during the summer. If that happens in August, this currency pair is in deep doo-doo. Fernando says, I see this as daily overbought, but careful as weekly looking strong. Crudy says 30.16 to 29.68 looks great. Jenny says, Rob, do I still do the Monday accelerator trade? Absolutely yes. Ollie says, on what basis do I choose my parameters for stochastics? I had a conversation with a friend of mine, Jake, who now works at the Minneapolis Grain Exchange. And he said, Rob, your oscillators move back and forth too quickly. And I said, well, I'll have them move slower. and I changed it to 30-10-10. I simply tripled the 933 that people usually use. Is 3020 a fib number or pivot level? It's a weekly pivot. It's near the weekly pivot for this week. Mike, Christopher, 3282 is the 200 EMA and the 50 blah, blah, blah. Would I see good resistance? Yeah, sure, Christopher. Which technical level are you hoping will come? It will come 3020. I think I just answered that, Maggie. Nassim says I'd be more concerned about the imminent collapse of the peso. You know, you guys are just great. I think I know who that is. All right. Let's get back into it. Can you see my chart all right? I'm pretty sure you can. And Rudy, how about that pound Swift? That was some sick action just a few minutes ago. All right. Here's the euro dollar on the 1 hour chart. The 1 hour chart's sort of what I call home, you know, kind of home base here. What do we have going on here? We have a currency pair correcting itself, coming out of overbought. And as it's coming out of overbought, it's reaching down towards this daily pivot from August 3rd. That's a missed daily pivot. And it's probably going to hit that daily pivot. It's probably going to hit 3140. If it breaks through 3140 to 3130, I'm thinking it's incredibly likely that we're going to get all the way down to the 200 simple moving average, which is at 3049, 3050, and then probably the weekly pivot, which hasn't been hit yet. The euro dollar has missed 2 weekly pivots in a row, and it's time. It's statistically reasonable to expect a correction. We haven't been oversold since July 21st. That's about 2 weeks, and that's a completely reasonable amount. If the currency pair closes below the 62 exponential moving average in the next hour, then I would gladly sell this currency pair. If you're daring and, you know, a little bit crazy, you could sell it now early as it's starting to close below 62, and I would have absolutely no problem with that at all. 31.65. And then a stop loss goes maybe back above today's highs, today's recent highs, you know, above 32.34. So you're going to have a wide stop. You may even have a 70 or 80 pip stop on this trade. But remember, you're going for 140 pips on the profit target, so it's not the worst thing you ever did. I'm going to put in here another indicator. A lot of you remember the New York box from about 1,000 years ago. Well, it's back on my chart here for our webinar today. If you don't understand or know what the New York box is, it's simply a collection of highs and lows for each day, which create a box around the currency pair. And a break outside that box creates a move in one direction or the other. Not always, but certainly is possible. And in particular, when the New York box breaks and the currency pair falls outside of the box or rises outside of the box towards, you know, a level like we've been talking about, 3020 or this daily pivot at 3140 and so forth, when it does that, those levels become strong targets for the currency pair. The red zone represents the zone that was used to create the box, and the blue zone represents an extension of that area so that I can see where the levels are without the red zone. So the red zone was the activity in the market that created the upper and lower parts of the channel, and the blue area creates an idea for me of where I would continue to look at that box without having to have the red zone displayed. Let's see. What are my thoughts about the euro bank stress test as it relates to currency? Don't have any thoughts on that. In your USD euro scenario, says John G., what about a minor correction after 3600 target before resuming uptrend as seen in April? You know, actually, John, that's a reasonable statement to make. John, I'd say if that's something that you've tested and something you're familiar with, that's not a bad idea. Fuji says if you want to short, I would wait to see it break the upper channel trend line around 3100. Not a bad idea. Not a bad idea at all. Okay, so if I were to sell this currency pair, I would do a few things. I'd either sell it on the 1-hour chart when it closes below the 62 exponential moving average that we've just looked at. Or on this 15-minute chart, I'd sell now, based on the fact that it broke outside of the box. I would fully expect, as a third area that you could think of, a retest of the 200 simple moving average on the 15-minute chart, or a retest even of the bottom of the box. And then at that area, the currency pair could be shorted with all of these targets that we've mentioned in mind. I want to say a word about the EU stress test for banks. That has been a non-event news-wise so far. If anything, it's led investors to believe that the Eurozone is safer than it might really be. And I have nothing positive or nothing really exceptional to say about that stress test, other than to say that it doesn't really appear to have had a major influence one way or the other for the euro. I don't think it's been the driving force in movement upwards. Maybe it has, and I could certainly be wrong. Questions about the euro? Long term, not long term, but I do think the euro has more room to go up. Short term, I think it's due for a fall. Hey Dan, it's really good to see you. Abel says, can you share your thoughts on the recent rise in the euro and pound? Yeah, sure, Abel. Dan says, I just had a short PSR trade close for 150 pip gain, short euro 32.11 to 31.61. That's absolutely brilliant. Just absolutely brilliant, Dan. That's fantastic. 5 stack. Dan, it's really nice to see your name here. It's really nice to have you here. Welcome to everyone who's here joining us. I'm going to move on to some British pound related currency pairs next, and we may start with the pound dollar. But before I do, I want to take another moment and I want to remind you that if you follow me on Twitter, which, listen, you can unfollow me tomorrow if you think I'm an idiot, I'm going to provide a discount code for the FX Street International Traders Conference that's held in October. It's the 20th, 21st, 22nd, 2010. And some of my very best friends who are traders and instructors will be at the ITC. My friend from Bulgaria will probably be there. My friends from London will probably be there. Some of my favorite traders and members of my own trading team will be at this conference. I don't know why Hot Tom always wants to move away from the screen that I'm sharing. Listen, I'm going to say it 1,000 times. These are can't miss conferences, and I don't say that about any other conference. This is it. This is the place to trade live with people, to see exactly what someone's doing, to sit inside of a small group and ask questions for 3 hours in the morning, for 3 mornings, about what they do and how they do it, to meet people who you will stay in touch with for the rest of your life as a trader. Hopefully the weather will be warm like it was last year, and I'll go to the beach and jump in the water. I've sat on these couches here and talked to traders for hours after the conference was over, with other instructors and with other people. There just really isn't anything quite like it. In the world of conferences, it's not expensive for what you get back. It's the deal of a lifetime, and seriously, I don't know if they're going to do this every year. Maud, you can give the honest truth. I mean, you plan to do it every year, but it's a huge, huge endeavor to do this. And it takes a lot of time and effort. And I want to encourage you, if you have not decided to go to this, please do. I don't get any money for this. They don't reimburse me if you sign up. I do get paid 500 euros for speaking to offset some of my travel costs. But I don't get paid a portion of the revenue. I'm not selling something that they're going to pay me because you signed up. I'm telling you right now, I would tell you to go to this even if I wasn't invited as a speaker. This is an exceptional experience. It is for a trader, it's a life-changing experience. Like I've said in the past, people who have been here together since 4 years ago are still talking to each other every day and trading together every day, vacation together. It is really, Martin Walker says it's highly recommended. I'm just saying that, listen, you know, you're not going to love every speaker. You're not going to want to go home with every single one of these and learn how to trade exactly like them. But you are going to absolutely be thrilled with everything that Boris Schlossberg has to say, everything that Todd Gordon has to say. I cannot wait to sit on the front row and listen to those people. I'm absolutely thrilled to be there and to be a part of that. And it is absolutely appropriate for all experience levels, because if you're a beginner, the speakers are going to speak to you in their presentations as if you were a beginner. And then if you're advanced or a beginner, when you get in those small group sessions with each of these people, they're going to talk to you individually. They're going to speak to you as if you're an individual. They're going to talk to you like you're an individual. And so for an advanced person, they're going to answer your advanced question. And for a beginner, they're going to answer your beginner question. It's as simple as that. Tiffany Hammond is probably the best instructor for people who are beginners in the world of Forex. I'm sure she would tell you that she's also completely able to talk about people and talk to people who are advanced as well. Tiffany used to work with me and for me and is absolutely exceptional in sort of discovering who you are as a trader. I've heard her presentation before, so, you know, it's not like I'm excited to see something that I've already heard before. I'm excited for what she's got that's new. That's what excites me. Whatever she's got that's new is going to be exciting. And I'll be honest with you, Boris and Todd are going to be exceptional. And Chris, I know Chris just marginally, barely. I think that'll be exciting. I just can't wait. I'm just totally thrilled to go there, and hope that you take the time to consider whether it's right for you. And I hope you sign up. The early bird special is over, but today on Twitter I'm going to post a code that lets you get a discount, a substantial discount off the price of the ITC. Once again, I do not get paid if you sign up. I do not get a commission on you signing up. It's just because I like the ITC, not for any other reason. I put it in here. All right, I'll post it in here because I'm a nice guy. But you still should follow me on Twitter, because that would be the nice thing to do, right? See if I can get it there. Here it is. There it is. There's your coupon code. And on Twitter, it's Pitopia. Or you can just search for my name. All right. Let's get back to talking about the market. Isn't that what's important? Check this out. Everybody, the euro is falling, and it's doing a pretty darn good job of it right now. It is on the way to yesterday's pivot that was missed. That's where it's going. It is on the way to 31.40. It's only 10 pips away. And that's where it's going. It's pretty clear that the currency pair needed to get back to that level. And it's pretty clear that today is dominated by a correction in the euro. Let's move on. There's some questions about the New York box and how it's set up and what it's comprised of. And let me give you the story here. The New York box is a creation of mine from six years ago, probably, maybe even 7 years ago. And it uses movement at the beginning of the day to trade breakouts later in the day. So the red zone, the red box that you see that encases the currency pair here on the pound dollar, that red box comprises the high of the day so far and the low of the day so far through, I think it's like 6 o'clock in the morning GMT, approximately, give or take. And let me see if I can bring up the chart correctly. Me and HotCom do not always get along. Here you go. All right. So you should see the chart now. So what this does is it takes the high and low for the day up until 6 a.m. GMT. So the market opens. And then it gives me levels that I can trade throughout the New York session, hence the name New York box. And if it breaks below that level, it's likely to go further down. And if it breaks above that level, it's likely to go further up. This is the pound dollar. And the pound dollar has an 800 simple moving average down here, a missed daily pivot from yesterday right here. And those are levels that it could very easily hit once it's broken out of the box. So for instance, I would short the pound dollar ideally back here on this candle on a close of 58.98 with a target of 58.30. So a 70 pip profit target. So if I take a break here in the next few moments, just because my son woke up and he's my best buddy in the whole world, so maybe I'll even have him say hello if he wakes up. But that's the New York box, and it's combined with the Arizona rules and some pivot levels on there. I'd be short the pound right now. That's what I would do. I think the pound yen is probably doing something different because there's talk of intervention or something crazy like that. But the pound dollar is, seemingly weak. Pound Swiss is on a rocket ship, piece of garbage currency pair. And let's look at the dollar yen, because somebody brought up that they think that there's intervention. That looks like intervention. You could say that's intervention. Sure. You could definitely put that in the category of an intervention style move. And that's when the currency pair broke out of the box, it hit the pivot for the day already. It didn't really have a target. And I don't really trade the dollar yen ever. So that wouldn't be something that I would be involved in. Let's see what questions you have. 6 a.m. to when? Mike, it's midnight GMT to 6 a.m. GMT. Midnight GMT, the beginning of the day, to 6 a.m. GMT. Don't see the screen now. Can I refresh it? Yeah, no problem. Dollar yen right up here on the chart. So you can see when the dollar yen broke out this morning and closed above the top of the box. Oh, I hate HotCom. Why does it change the location of my cursor? Why does it do that? I'm trying to focus on something, HotCom. Seriously. Do you know how much that bothers me, HotCom? So the currency pair breaks out of the box and closes outside the box, but it's already reached whatever target we might really want for it, so it doesn't really apply. Could you target the 800 simple moving average on this currency pair instead of something else? Yeah, sure. You could even target the bottom of yesterday's box. You could do a lot of things. You're going to have to test that for yourself. I'm not here to tell you and teach you every intricacy related to the New York box today. I'll consider doing a webinar series on it or writing a book about it, but that's about it. Okay. Questions, comments, and or jokes? I turned off screen sharing so I could see your question. The dollar yen seemed to jump after the ADP data and again after the ISM data. Oh, that's just market reaction then. That has nothing to do with intervention. Yeah, that's just market movement. How can we get the New York box? You can't right now. There's no way to get it right now. It's something you can just draw on your chart right now. I'm not set up to even know where to find the indicator to have you download it right now. But it'll be coming. There'll be a time and a place for that, for sure. What time is the box in the U.S. session? 4 p.m. Pacific to midnight Pacific. That'd be fine. Something like that. Jet says, Rob, are you doing any one-on-one mentoring? No, I'm not really selling anything Just managing money right now. Not really doing anything else. Jed, if you're interested, you can write me at rob@robbooker.com. And maybe in the next few weeks, I might do something. But I'm really focused on managing money, my own money and investor money. That's really the focus for me. I don't really want to sell a lot of stuff anymore, although now that I've said that, I'll probably go ahead and do it. So, all right. So Christopher asks, how is Barcelona compared to the Vegas Expo? Well, the Vegas Expo is a great smorgasbord of products and services available to you and presentations by a wide variety of instructors. The expos in Vegas are good. They're not bad. They're not terrible places to go. It's not the same. When you pay to go to the FX Street International Traders Conference, what you're doing is you're paying to attend a much more intimate and much more personal level of instruction. It's like going to a seminar held by these instructors that would ordinarily cost more money, where they're going to trade in front of you. They're going to bring their live account and they're going to trade live in front of you. And they're going to talk to you. Boris Schlossberg may be the most enjoyable personal live trader in the world. He may be the most fun to watch trade live ever in the world. And he's great. And he will absolutely, he will be larger than life. And you'll get to know him. At a Vegas conference, you're not going to get to know Boris Schlossberg in a room of 200 people. But when you're sitting at a table around Boris of 10 people, you're going to get to know Boris. And he's going to give you his email address, and you're going to know him. But, more important than that even, though, is that you're going to be sitting next to people that week, and you're going to get their email addresses, and you're going to stay in touch with them. So that's where I think it really comes into. There's no products for sale in Barcelona, which makes it a big difference as well. You're not going there to be sold anything. So. Yeah, exactly. I don't do 9 hours of live trading anywhere except for FX Street, and I won't go to lunch with you in Vegas. And honestly, I go to fewer and fewer conferences as time goes on. I go to I go to this. This is what I like. This is my place. So there you go. Appreciate the chance to talk to you about these currency pairs. Does anybody have any other questions about currency pairs or thoughts about the market in general? Anything else going on? Anything else in your mind? I want to look at the Euro Swiss. That Euro Swiss is really something else. What moving averages do you use? 200 simple moving average, 800 simple moving average, and the 62 exponential moving average. The peso will collapse. It's in my book. Oh, that's really good. So Pit Magnet, I've already told you what I thought about the euro dollar for the rest of the year. Everything that I've said today, you can look back over and look at that. Barcelona is extra special because of the 10th anniversary. That's right. New York box is midnight to 6 a.m. GMT. Yes. How about the title of this webinar? Can the USD reach 1.1? And fine. So it's the title of it. Let me tell you. Let me tell you what I think. Oh, the euro dollar already fell. So I hope you got a piece of that. Hope you were able to participate in that. The euro dollar can, in the next 6 to 12 months, it absolutely can reach back down. Let me tell you, if the euro dollar comes back down to the weekly pivot, the weekly 800 simple moving average, absolutely, positively can get down to the 1.1 area easily, very easily, and it can surprise a lot of people, and it could take a lot of people by surprise, but it's absolutely positively possible that it would do that. There's no question in my mind that that can happen. Absolutely none at all. Yeah, it can get there, and it would take a lot of people by surprise. But first, I think we need to see maybe a little bit of a move higher. Maybe. We could be on the way down right now. Everything that I would trade on the euro dollar, we've talked about today. The sell trade that we talked about in the short term, then the longer term buy trade up to 34 or so, and then the big picture drop back down. All of those things are things I believe could happen within the next 6 months. And that'll be it. Maud, thank you for your time. Everybody here, thanks for joining us today. I appreciate the time that we spend together. I appreciate that you joined us this morning, some of you on short notice. I want to express my appreciation to FX Street for holding the conference. I hope that you take advantage of it. If I didn't get to your question, send me a tweet on Twitter. It's at Piptopia on Twitter. And I'd be happy to respond that way as well and provide a chart if I need to. So if I haven't answered your question, just send me a message on Twitter and I'd be happy to answer. And the webinar's been recorded, and I'll be back again. Don't you worry. See y'all later. Have a wonderful day.